with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey guys, thanks for checking out the Private Lenders Podcast. Chris and Jason here as always. Today we got a good story for you. We're going to be talking about the craziest default scenario we've ever been involved in 15 years of private lending. Real quick before we get started, just announcement that we've been putting out there that we are having our first in-person Mastermind Inner Circle meeting. First one in anything in person in quite a while, and we're really excited about that. November 3rd and 4th here in our area in Columbia, Maryland. And you can check it out at hardmoneymastermindinnercircle.com. We'll have about 20 or so of awesome private lenders from all different parts of the country working together, helping each other out, sharing deal flow. We're excited. It's going to be cool. All right, let's dive in because this story takes a little bit. So the craziest default that we were ever involved in started with getting a loan request from a builder who was about 75% done with a property in McLean, Virginia, which is DC suburb, right outside of the city, very high end, very expensive. And this property was big, right? Custom home he's building in the same neighborhood where he lives. It was going to be, I don't even know what it was, 8,000 square feet, something like that. So a little bit of backstory on this situation is that he built it out of pocket just using cash up to half done or something like that. And it caught fire and burnt down. Right? It's a mystery as to why. And then he built it again out of cash to like the 70% mark, right? Is that how you remember it too? He got about 70% and then he reached out to us.
Yeah, so, maybe a little bit more than 70%, but yes.
Yeah, I remember walking around in the house. It was all obviously framed and all the mechanicals and everything was in. I don't think he was to drywall yet, but he was right before that. Or maybe he was in the middle of drywall, something like that. I remember being in the property early on. And okay, so we had collected a certain amount of interest up front. Maybe it was 6 months or 9 months. We collected a bunch of interest up front, and he didn't have any payments for a while. And we were doing construction draws to him. Maybe the total loan was $500,000, something like that. I don't remember exactly the loan amount. And what happened next, as you recall?
So during our, he needed a bridge loan. Let me actually bring a picture of what the house looks like on the screen real quick. So if you're listening to this on iTunes, thank you. We appreciate you listening on iTunes or podcast. If you're listening to the audio, hey, if you really like this episode, feel free to share it with your friends and give us a 5-star review. If you're watching this on YouTube, if you go to our Hard Money Mastermind YouTube page, you'll be able to see some of the pictures of what this particular property looks like. So all right, as I'm talking this, the pictures are going to load. So I'll bring that onto the screen in a second. So, okay. So this is what the house looked like, kind of when we came into the mix. This is a gigantic house. It's 10,000 square feet. If you can kind of see in the back of the picture, these 800 or 1,000 square foot ranch style properties that sit around it. It's very unique for the area, although this area had very valuable land value, probably $500,000-$600,000 just for the land. So a lot of developers and small builders, homeowners were demolishing houses and building big, humongous, gaudy monstrosities next door. The house to the right of it actually never even got any sunlight because this darn house was so big that it just overshadowed it. This picture right now that you're looking at doesn't even do it justice how big the property is. It
was huge.
It's just gigantic. On the other side of it, which you'll see in another picture, is a 3 or 4 car garage to the left of the house. It's big. It's really, really big. So he came to us because, he tried to finish the project with cash, but he didn't have enough cash to finish it. So he came to us for a normal bridge loan. We did a construction holdback to for him to finish the thing, finish the property. So Chris mentioned the first fire. There was actually, did you mention the second fire, the little fire that he had?
No. So the first one is before we got involved. And then the second fire was a small one during our loan term.
Correct. So, and we didn't even find out about the second fire at the time, even though we were a loss payee on the insurance policy, which you have to be if you're the lender on that, it was a small internal fire. and I think the insurance company gave him the proceeds. And I mean, he had finished it at this time, so it was, or he used the money to finish the project, so it worked out. Long story short, the house is completely done, and now comes fire 3.
Hold on,
actually, you're right, because he was in default before that happened.
Yeah. So backing up on how he got into default. So after the period of prepaid interest expired and he actually had to make payments is when he defaulted. And in Virginia, the foreclosure process is non-judicial and very quick. So you can basically send a demand letter, send a notice of a sale, advertise, and sell all within like 60 days or something. So because he was not paid and the property was done, is on the market, it was overpriced, I remember, and he needed to drop the price, we started the foreclosure process, right? Didn't take long. And then in order to stop the foreclosure, he declared bankruptcy, which is a common tactic, right? Common tactic to stall a foreclosure, to stay our foreclosure, is to declare any kind of bankruptcy. And then you have to have like a series of hearings to see what's going to happen. So it buys time. I don't think this guy was actually bankrupt. He ended up entering into a plan. And again, like, you might be doing this because you actually want to go through a bankruptcy repayment plan or not. It could just be stall tactics, right? So that he could sell. And then during this time, while we're in, and I was in court a few times with our bankruptcy attorney, working on our side as a creditor. And during this process, the house catches fire again, completely done, on the market, big bad fire this time. So obviously there's something going on here, something shady, arsonist, we don't know. Is it him? Is it the neighbors? Is it who knows what? We don't have an answer to this day. But all right, do we have pics of that too? So then the next fire hits.
Yeah, this one's not opening.
Okay, if it does, we'll just come back to it.
Yeah, I have the one after it's boarded up.
Yeah.
I want to get. I'd like to get this one in before. Yeah, this thing's not loading.
So during this, all right, so then the property burns bad, right? And we have to have contractors go out there. Oh, here's another thing. During the default period, when we were trying to get to foreclosure, he was in bankruptcy. We had to put a forced place policy on the property. He was not going to pay for insurance. He wasn't paying us. We didn't really trust him to pay anything, and we had to protect our interests. So we got our own policy. It was a high risk policy due to the fact the property has had 2 previous fires and the owner's in bankruptcy. Is a very high risk policy. We found one insurer out of Salt Lake City, Utah, who would write it, and it was super expensive. It was like 50 grand for 6 months or something nuts like that, right? But we had no choice. So we put the policy in place, paid for it, and so now we're covered. And then the next fire happens. So now in bankruptcy court, they find out about the fire and everything else. He's also not following through with his own bankruptcy plan that he was trying to. And he might have even like not paid his attorney, and he's repping himself at this point, like something nuts like that, right? And I'm in a bankruptcy court for hearings and everything else. Long story short, they dismiss the bankruptcy. They throw out his case. So we can go to auction sale. So we schedule an auction sale. And there's, like Jason was saying before, there's a lot of value in the land. Even if a builder's going to buy this and tear it down, which they have to because the place is ruined. Like, had a temporary roof on it. Like, they had to basically just protect what was left of the property, but it was ruined inside, burned, soot and ash everywhere, water from the firefighters. Like, it was a mess in there. So, okay, then we finally get to an auction sale. Our foreclosure attorney's doing the whole thing, and we're there. We're there with one of our investors. Me and Jason are there. There's a crowd of people. There's neighbors there. There's builders who want to bid on the property. It's a crazy scene, right? Everybody in this neighborhood knows about this property and its history and everything else. Oh, there's a pic. If you guys are watching on video on YouTube or in the Mastermind, you can see that place with no roof because the fire just torn through it. It was gnarly in there. Trust me. We went inside. So finally we get to auction sale and somebody buys it. I don't remember the exact buy price, but it was a pretty good result for us. We sold the property, got a good chunk of what we were owed. And then the next part was to collect from the insurance policy, right? They needed to pay out proceeds from the coverage that we had on the property before it caught fire, which, like I mentioned, we paid a shit ton for. So the insurance company, this shady company out of Salt Lake City, Utah. Oh, there it is when it's all like
boarded up. That's what it looked like for the auction sale, because we had to make it look pretty in order to do so. So keep in mind, between everything happening in the auction sale, he was still the owner, but we had to protect our interest. We didn't have that insurance. His insurance lapsed, right? So we had to, for instance, get a force-placed insurance policy. We couldn't get one because it was very difficult to get one, and then ended up being very expensive because he already had multiple fires. But we needed something that would protect ourselves. When you have a default, and the borrower is just not capable of helping or walks away or whatever the instance is, like, you got to do what you can to protect your asset. At this point, the new buyer was just buying this thing for land. And luckily the land was valuable, but hey, if you do a loan for whatever, 500,000, 700,000, whatever, it ends up, a high loan, and it doesn't matter. Even if you do a loan for $50,000 and you go to the property and the house is burnt down, you get a little freaked out. How many years ago was this?
So this took place probably from, I'm estimating here, maybe like 2012 to 2016 or something.
Yeah.
Like it took years.
Yeah. So this was year 5, because we started in 2007. So that was year 5, and it wasn't, now we're going on year 16 inside of our business. So like year 5, we're a mature business, but we still don't know everything, right?
I mean, like for the entire shit show this became, like, we handled it all well, right? We're in constant communication with and we're going to get back to the default process, but we're in constant communication with our capital investors who are involved with this deal. And there, in hindsight, I really don't think there's anything that we could have done differently.
Yep.
I
mean, maybe try to push things along a little bit quicker because we knew the process a little bit better. But that's about it. I mean, we moved as quick as we could, but I mean, you were on site. Yeah. I mean, you were on site when the house was on fire. The reason we knew the house was on fire was
somebody called one of our investors and said, he's also a good friend of ours and who's in this area. It was right before Christmas, I remember. And he said, yeah, about that, property that was on fire. We're like, yeah, we know about it. It was months ago, whatever. Like, and he's like, no. It burned again, like last night. And so I drove over there because at the time I lived not too far away. I was just on the other side of the Potomac in Maryland, in DC suburbs. And I drove over there, and sure enough, that place is burnt to a crisp. The fire department had finished that morning and they were gone. So the entire place is soaked. There's neighbors everywhere. It was a scene. It was an absolute scene. But yeah, back to where we are in the story. So we had sold the property at auction sale. We got a good price for it. That part's good. And
but it wasn't enough to pay off our loan because we're just selling the land. So keep that in mind.
The land only. And then we had, I don't remember the numbers on the insurance policy, but we were owed a lot of money. So the shady company out of Salt Lake City, instead of paying the claim, they sued us in Utah court, and they sat on it for a while. For like a few months, they did nothing.
And a little context related to that, as a company, besides that they were shady, the insurance company, and they weren't like an insurance company that you'd ever heard of, but we didn't have a choice. Like, we had to risk getting insurance. It was the only one to find. I think we were into this thing at about $100,000 in insurance costs between the whole term. But anyways, that's a different story. Part of their requirements is they wanted a fire marshal to issue a report of what happened. And the fire marshal, typically when there's arson or when there's a bad fire, everything's destroyed. The fire marshal doesn't know. Like, they didn't have an opinion on it.
Yeah.
So
they wouldn't issue a report because it wouldn't have been conclusive.
That's right. So, and the insurance company, and keep in mind, I don't know if anyone listening or watching this has had insurance claims. Typically small insurance claims are very easy and quick. Large insurance claims might not be, right? They're a lot more, insurance companies don't like to lose money, right? So they want to figure out, they might pay out to the policyholder, but then they need to figure out who they're going to collect on. And they realize they're not going to collect on this. They don't know what happened, right? The fire marshal was inconclusive. They didn't know what was going to happen or how they were going to get repaid. So they made a business decision of, we're just going to extend this and we're not going to pay out a claim. It was hundreds of thousands of dollars. It wasn't like $15,000 go away. It was hundreds of thousands of dollars. So they were like,
Yeah, like $1 million.
Yeah. So yeah, so it was one of those things that they just were like, oh, maybe these guys will go away. And we had to, obviously draw lawsuits in order to collect.
Yeah. So what happened next was, along with the lawsuit, came a subpoena to be deposed. I had to do a deposition with the insurance company's local counsel in DC that they hired. So we had our lawyer. I went through maybe like a 3-hour deposition, something like that. I was preparing over the weekend with our attorney at their office, and then going into a Monday deposition. So it was fine. I was ready. We were prepared. We're in the right. Like, we were doing everything by the book. So I wasn't worried about it, and it worked out fine. And so what happened next was they agreed to mediate. I don't think they wanted to get into a full-on litigation lawsuit and have it decided by a court. They're willing to make a deal. So, okay, then our local counsel finds an attorney who specializes in this sort of thing in Salt Lake City, and we hire him to help us with the mediation. And we fly out there. We have mediation. It was a show, dude. So in one conference room is me and our attorney. In the other conference room is the insurance company and their attorney. Jason was able to stay in the hotel and work and at least make a productive day out of it. And the mediator goes back and forth between each room. They do this whole dog and pony show where they read like all the facts of the case sort of thing. Not like we all don't know, but it's a dog and pony show. And they keep going back and forth, and then they start talking numbers. They're like, okay, so they're willing to pay out, I'm making up numbers here, but they're willing to pay out $300,000 on like $1 million claim or something like that. And we're like, yeah, no chance. And they're like, we want, $950 out of our $1 million. Then they go back to the other side, and they keep doing this back and forth. And so, long story short, on the day of the mediation, we never got close enough. We didn't get close enough. We were maybe $300K apart, something like that. And so after they weren't budging anymore, we weren't budging anymore. I was like, all right, let's wrap it up. All right, lawyer, we're out of here. Jason and I are going skiing. It's April in Utah, and we're 45 minutes away from the ski mountain. So we got ourselves a room at the ski lodge, and it was off season. It's like April. It wasn't crowded at all. And we went skiing for the second half of the day and then hung out there. And then the next morning we're Ubering to the airport to fly home. So they say in mediation that if the lawyers agree that they're going to get somewhere, if they think they're going to hit a number, eventually the parties get there too. And that's in essence what ended up happening. And again, I'm just kind of like estimating numbers here, but maybe they were at 300, we were at like 950 on $1 million claim, and we end up settling for like 600, something like that, right? So we met somewhere in the middle. It was fine enough. The attorneys get a big chunk of this. I don't remember, maybe 25% or something like that they get on contingency.
Because they work by contingency. So,
Right.
which I think they made like $200,000 or $150,000 or something like it, which worked out for their favor. But like we at least, we were able to negotiate that with this law firm up front, so we didn't have to just keep writing checks.
Right. No, totally. We were not paying this out of pocket. It was paid on contingency. And the end of the day, the net number worked out to be fine between the sale of the land, between the sale at auction sale and the insurance claim. We got back our principal. We got back legal fees that were owed for our local attorneys, and everyone was made whole, right? Like it was a shit show of a process. It took years, a lot of headache, and at the end of the day, our investors were pleased with how we handled a very, very bad situation. This is about as bad as you can get in terms of a loan default. Like, I mean, think about it. Foreclosure, bankruptcy, multiple fires, insurance company, lawsuits, left and right, all the litigation. This is as bad as it can get. You can't even make one up.
Yeah, not only is the borrower not cooperating and not paying their bills, but there was, and if we just went through a regular foreclosure process on that, whatever, that would have been a default and it worked out. But then on top of that, the house burned down and we had to go fight to get an insurance policy, to cover to cover our losses. So, it's not the first time that we've had insurance claims. We've had title insurance claims. We've obviously had foreclosures and judgments. So we've been involved in every default situation, but there's usually not multiple all at once.
Yeah, no, it was wild. And hopefully nothing like that ever happens again. Regular defaults are fine. That was nuts. So Anyway, that is our craziest default ever. Hope you enjoyed the story, learned from it, and took away something that you can apply to your own lending business. And like I mentioned at the beginning, if you want to come here and work with us in person and 20 other top private lenders from around the country, check out Hard Money Mastermind innercircle.com. And we hope to see you here in November. See you guys next time on the Private
We hope
Lenders
you
Podcast.
enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you'd enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you spread the word. Make sure to check out hardmoneymastermind.com, the #1 free